While the sales price in the luxury market has been all over the map over the past 12 months, there has been explosive growth in this price segment in a number of indicators in a way just not seen in any other segment. Hi, this is John James with the James team at RE/MAX Partners, and this is another edition of the Steamboat Market Update. August 2021 Luxury Edition. And the luxury market has been an anomaly. It defies logic in some respects, but the reality is that some of it just makes sense. So let's get into it and I'll explain. Starting with median sales price. At $2.7 million, the price is up over 8% over this time last year. And while the price came off the highs in March of 2020 at the beginning, it has bounced around in the last year and a half and just popped up from last month by 7.5%. But here are the numbers that just blow the rest of the market out of the water. The total number of sales shot up from 43 to 136. That's a 216% increase. And the total dollar volume went from just over 137 million to 440,460,990. 220% growth over a year. And that is in alignment with the past 15 months where we've seen pure hockey stick growth. And here's why I say it just makes sense. This is the area of the market where most of the building is happening right now. And, well, we can debate whether that is right or wrong, but the reality is that there are very few buildable lots, and those available lots right now are the high value lots. And the demand hasn't dropped off. So high demand and better than other segments for supply equals more sales. And more sales in a high price bracket then translate to a much higher dollar volume. Going back to supply and demand, the amount of time on market has dropped from 92 to 57, a decrease of 38%. And the month supply of inventory in the luxury segment is now 5.7 months, down 71% from the 19.7 months last year. In some context, 6 months is a stable, balanced market for real estate in general. For the luxury market, it's usually about 24 months. So for the supply to be this low compared to the norms, it's telling. Active listings dropped from 77 to 54 over this year, dropping 30%. But take note, new listings have increased by more than half, from 104 to 157. This is significant because we need more listings to satisfy the demand. So seeing an increase in over last year, it's great. The flip side is that this is the second straight month where we have seen it drop over the previous month. Sales to list price ratio for the luxury market is historically lower than the overall market, but we did see an increase in the segment by almost 2 points to 96.4% over last year. And it's not a surprise to see price per square foot increase from last year. 35% over what last year was, from $471 to now to $637. And one statistically insignificant sector was price reductions, where it was equal at 8 from last year. Finally, pending listings. Those have more than doubled from last year, 68 to 143. But keep in mind, these have plateaued over the last couple of months. If we see a low increase in new listings, I expect pendings to start going down month over month in the future. So there are price segments they've finished up. Type segments are next. If you want more detailed explanations, I'd be happy to go over with you. Just call or text me at 970-846-0797. Email me at johnjames@jamesteamsteamboat.com. Or comment in the video. And while you're at it, please give this video a like too. Take care.